It's a Tuesday morning. Your bank app works. Your card works. The coffee is fine. But overnight, in Washington, a payment that has gone out on time for 2.5 centuries didn't. No explosion. No sirens. And that's the scary part. Because by Friday, everything on Earth has a different price. America has made essentially every payment on every bond for as long as global markets have existed, and markets treat that promise as the one fixed point in the financial universe, the still spot the whole compass spins around. Today we ask the forbidden question: what actually happens if it breaks? This is magnitude. Start with what treasuries actually are, not just IOUs, the measuring stick. $29 trillion of them, trading every day, and every other price on earth stands on top. Your mortgage? The treasury rate, plus a little. A company's loan? Treasuries, plus more. A whole country's borrowing? Treasuries, plus trust. Economists call it the risk-free rate. It's the zero that every other number is measured from, and it doesn't sit in a drawer. Treasuries are the bedrock collateral of banking, the thing you hand over when you need cash instantly, because everyone, everywhere, agrees it's as good as cash. The entire tower of world finance is standing on this one stone. How much weight is on it? Every single day, the repo market, the overnight machine where banks borrow against treasuries, turns over more than $12 trillion. Not per year, per day. That is more money moving overnight than almost any country on earth produces in a year. A river that only flows because of one assumption: the stone doesn't move. Mag works the night shift down here. Nothing ever happens. So let's run the simulation. Hour 0, a payment is missed. Hour 6, money market funds, where companies park their billions, start cracking below the $1 line. Hour 24, the bedrock collateral isn't quite trusted anymore, so lenders demand extra. Margin calls, cascading through the system. Hour 48, the risk-free rate isn't risk-free, so every rate built on top of it climbs. Mortgages, credit cards, small business loans, in Ohio and in Jakarta. Hour 72, nothing has exploded. Everything just costs more, everywhere, at once. Because when the 0 point moves, every number on Earth gets rewritten. The world doesn't crash, it reprices. And this is not a theory, because it already happened. 1979. A paperwork failure at the Treasury. About 4,000 small checks, $122 million, went out late. Late, not unpaid. Treasury yields jumped 0.6% and stayed up for months. Estimated cost, around $12 billion a year in extra interest. That was the price of a filing glitch. Now imagine doing it on purpose. America has flirted with on purpose. 2011, Congress played chicken with the debt ceiling, and S&P downgraded the United States for the first time in history without a single payment being missed. It happened again in 2013 and again in 2023. Each standoff a little longer, each resolution a little later. The near misses alone left permanent marks. Now the part nobody says clearly. America borrows in a currency America prints. It can create dollars without limit. So a U.S. default can never be, we ran out of money. It can only ever be, we chose not to pay. The scariest event in world finance isn't economic at all. It's a decision. And who would the decision actually hit? Remember last episode, every debt is somebody's savings. 2/3 of this debt is held by Americans, pension funds, banks, retirees, the government's own trust funds. The biggest holder of American debt isn't China, it's America. Refusing to pay the debt means refusing to pay grandma. The foreign rivals everyone imagines punishing, they hold about 1/3. The rest of the pain lands at home, in accounts that never did anything wrong except believe the promise. A default doesn't burn the borrower's house down. It burns the lender's. And the lender is you. MAG has quietly updated the crisis manual. Under financial disaster, he's written, see political decision. The machine was never fragile. The finger on the button is. On the wall of the crisis room, there's a counter. Days without a missed payment. 17,170. And counting. Every single one of those days was a choice. Come down the tower with me. At the top, your credit card rate. Below it, your mortgage. Below that, your bank's own borrowing. Below that, entire countries priced off the same line. Keep going, past the pensions, past the 12 trillion a day river, all the way to the bottom stone, and carved on it one promise: America pays. Money is trust. Ownership is permission. The internet is an agreement. Debt is a promise. And the whole tower stands on the oldest promise still running. Here's the secret the crisis manual won't print. The system doesn't run on payments. It runs on the belief that the next payment always comes. Stones don't hold up towers. Belief does. And belief is the one material nobody can print. So, what if America refused to pay? Rates rise everywhere. Savings shrink at home first. The safest thing on earth stops being safe, and every price rebuilds on a shakier zero. Nobody sane wants it, which is exactly why the promise has held for 2.5 centuries. But while everyone watches the borrower, look at the believers. The single largest private holder of the world's promises is a company most people can't even name. It owns a piece of your bank, your airline, probably your employer. Next time, the $10 trillion company that owns a piece of everything. The $10 trillion company. That's next time on Magnitude.